All right. Hello, everyone. Thank you for joining us today. Welcome to our monthly call. I'll be your host for this 1-hour session. My name is Glendening, Director of Marketing here at Hashdex. Today's subject is a year of fundamental leaps, how crypto's investment case has avoided the winter. To discuss today, joining me is Pedro Lapenta, Head of Research here at Hashdex, and Lucas Santana, Research Analyst, also at Hashdex. Gentlemen, thank you for joining me. A couple of housekeeping items before we start off. First, a disclosure. This monthly call and its corresponding presentation are informational purposes only. This presentation is not an offer to buy or sell, nor is it a solicitation of an offer to buy or sell. Certain information contained herein constitutes forward-looking statements. Due to various risks and uncertainties, actual events or results and the performance of any products mentioned may be substantially different from those reflected or contemplated in such forward-looking statements. As a result, investors should not rely on such forward-looking statements should they be making any investment decisions. Additionally, we will have, after the presentation, we will have a Q&A. So feel free to ask any questions below in the bar, and we'll get to them after the presentation. So with that, let's get on with the main discussion here. If you haven't been with Hashdex before, a little bit about the firm. We've been founded in 2018, and we're a leading crypto-focused alternative asset manager. We exist to bridge the gap between traditional financial markets and the crypto ecosystem with simple, secure, and trusted products. And really, when we talk about our product set, we really are global. Like I said, we were launched in Brazil in 2018, but we have products across the world, in Europe, in Switzerland, Netherlands, France, Germany. We most recently, actually, as of Monday, launched the Hashdex Crypto Momentum Factor ETP. We also have a partnership with NASDAQ for a number of index products, like I said, broadly on the world stage. For more information about our product set, please go to hashdex.com. And with that, let's get into the discussion. I'll turn this over to the research team, and they can take it from here.
Thank you, Chris. Thank you, everyone, for joining us. Today, we're going to talk about, as Chris just mentioned, kind of give an overview of what happened in 2022 from a fundamental perspective, obviously from a price perspective as well, and send a message to you guys, a brief message that, although prices have come down, we're seeing several fronts of development in the crypto space that make us very optimistic over the long run. We are today, the next day of a major event that just happened, which was, you guys might be aware, the FTX Binance situation. We're going to briefly discuss about it, but it doesn't, take away the message, our long-term view that, crypto is here to stay. Blockchain technologies are here to stay. This is a major technological shift that is happening right in front of our eyes. It's a global settlement layer that has been developed, and it's something that, humanity had never seen before. It's a global transfer of value mechanism that is being developed, and these are exponential technologies. These are networks. And we are very optimistic over the long run. The short run, obviously, we have the macro situation still making it difficult to see, 3 to 6 months ahead of us. But when we dig deep and then we look at what's going on in the markets, we are optimistic. We're here, as Chris just mentioned, we're here building products, launching ETFs worldwide, making these products, these high-grade products available in major markets, because we know, the technology is here to stay. So Lucas is going to explain a little bit, these fundamentals that we put out, a few slides for you guys, and then we're going to talk about, what's next, and especially we're going to talk about, if some of the things that we're seeing in price action recently are signals we're calling it signals within the noise. And we're trying to answer that question with humility, though. But so this is our agenda for today. Lucas, please do the first part for us.
Yeah, Pedro, thank you. Well, thanks everyone for joining. I would also like to remind everyone, if you have any questions, please post them in our Q&A, so then we can address them at the end of the presentation. And as Pedro was saying, we are at November right now, and we have seen a lot in crypto in this year. And today the idea is to discuss what can we extract from everything that happened in the asset class, both from when we look from the, let's say, the price side of things, which hasn't been great for the year, as you all know. But when we look at the crypto fundamentals, we believe there's several data points showing the strengthening of the thesis. If, again, you think of this emerging asset class as something that you should invest, thinking in the long term. And I started the discussion basically comparing crypto, the asset class, which here we represent by the NCI, the Nasdaq Crypto Index, with other benchmarks in other asset classes. So here in the chart, we show like the S&P 500, the Nasdaq, and also one specific tech stock, which is Facebook's stock, and the performance of these three when compared to the NCI until the end of October, right? So we just finished October. So when we look at this performance, we see that indeed tech has been a lot, crypto has been very correlated with tech. And when we compare the drawdown during this year in terms of price for the NCI, for instance, and even Meta, which is our example here of a huge tech stock which had pretty significant drawdown in 2022, we see that indeed we didn't have a good year in terms of price. And when we focus specifically in crypto, and we give like a special attention to the NCI, we see that this performance, and when we look a little bit deeper into the asset class, it has been, let's say, the drawdowns have been more abrupt and more intense when specific players in the asset class, and I emphasize here the word centralized, when I'm talking about these players, they were majorly responsible for the huge sell-offs or fall-offs in the asset class that we've seen in 2022. One of them is, and we discussed this in the first half of this year, was Terra Luna, which was one of the smart contracts platform that we had emerging in 2022, and it had a very bad, so to speak, technology backing a stablecoin called UST. And when this blockchain and the stablecoin crashed during the beginning of May of this year, we've seen a sell-off in crypto. This was the first instance of, let's say, a really bad technology being implemented in crypto and gaining a lot of traction, that when the market really began its downturn, was exposed, and eventually we saw that the market suffered with the decline of Terra and with the Luna token. A second example, I think it's important to stress here, is also Celsius. So Celsius was this crypto lender, also a centralized player in the space. And in June, mid-June of this year, we also commented on this at the time, they halted the withdrawals from clients. And when this happened, also we saw a pretty significant decline in crypto. So these are two examples that made the drawdown in crypto in this year quite substantial. And actually, if, as Pedro was saying, yesterday, we also had another event, also involving a centralized player, which was FTX, one of the greatest, largest centralized exchanges in the world. And yesterday, we've seen that actually they were not in a good shape. Not only FTX, but the other sister company of the group called Alameda Research. So this is yet another example, and of course, we would like to discuss a little bit about it today, and to try to give you some clues on what happened with FTX and Alameda Research. So in summary, basically we have FTX, which is this crypto exchange, a global crypto exchange, is led by Sam Bankman-Fried, right? Some people call him SBF, and he is the same founder of the trading firm Alameda Research. So in this past crypto bull run from 2019 to 2022, we've seen FTX emerge as one of the top exchanges in the space, amassing like the third place globally in total trading volume. And last week, in November 2nd, an article by Coindesk, which is one of the main media firms in the crypto space, showed information that an internal Alameda document, which is this trading firm of the group led by Sam Bankman-Fried, the balance sheet of this trading firm was actually highly concentrated on a token that FTX, the exchange, issues, which is called FTT. It's basically a utility token that you as a client of the exchange can hold and pay fees with a discount, and also engage with levered trading in the platform. And one of the things that happens with this token is that in actuality, it doesn't really have a lot of utility outside of FTX. And given that, it has generally been quite illiquid. So this started sounding an alarm in the community that maybe Alameda Research, which is this trading firm, could be in a bad situation. And actually, one of the another big player in the space, which is Binance, led by CZ, Changpeng Zhao, its CEO, announced that they were, because of this breach, so to speak, of the balance sheet of Alameda Research, they were like selling all their remaining exposure to FTT, because Binance was an early investor in FTX, and they received FTT tokens as part of their the holdings with regards to the equity of the firm. And this actually strengthened, right? The big player is saying that they are selling the token that is backing most of the balance sheet of this firm, Alameda Research, and started igniting a sell-off of this token, FTT. And also, since people know that Alameda Research is quite close to FTX, what happened is that we started seeing a bank run on FTX. So essentially, clients started to withdraw funds from the exchange. And at first, SBF announced that the exchange was fine and all the clients' assets were fine. But yesterday, in the beginning of the morning, on-chain analytics showed that the withdrawals in the FTX exchange had been stopped. And only a few hours later, in the early afternoon of yesterday, we saw SBF announcing that FTX was signing a letter of intent for Binance to do a strategic transaction. So basically, these events from last week until today, they show that there were maybe some relations between Alameda and FTX that really wasn't really disclosed to the public. And this movement in the market that was triggered by the sell-off of these FTT tokens, which again were a very important part of the balance sheet of Alameda, really had some pretty significant contagion to the FTX exchange. And I think this is basically a summary of what happened yesterday and since last week. So when we think of this situation, and again, maybe I cannot stress enough this, but it was yet again a CFI problem, a centralized finance problem, and it is indeed related to crypto, but it's a centralized company that, again, just like Celsius did in the middle of this year, didn't have the proper risk management and actually incurred most likely in a asset liability mismatch. And in the short term, I would say that we can expect volatility, as we have been seeing not only in the FTT token, but also in the crypto markets in general. As I said, FTX is the third largest exchange by traded volume in the world. So we can expect that the sentiment with regards to crypto in the whole world is shaped, and other assets in the asset class can indeed be affected in terms of price in the short term. But again, as I think we want to demonstrate here today in some of the data points that we want to show, We believe that the long-term investment thesis is not really shaken by these event regarding FTX. And I think some things that are important to stress is another token that was also a major holding in the balance sheet of Alameda Research was Solana. So this is one of the key projects in the crypto space that we believe it's very important to keep an eye on, and we surely will do in the forthcoming days and weeks. And this is yet another demonstration, in our opinion, of how centralized service providers in crypto need to be regulated and a lot more transparent, perhaps, than what they are today. We're already seeing centralized exchanges like Binance talking about implementing proof of reserves so that this kind of event can really stop happening in the crypto space. And an important disclaimer here, I think, is that, well, Hashdex products, they do not have any exposure either to Alameda, FTX, or FTT. So this is one important thing. In none of our products, nor in Brazil, nor in Europe, and neither in the US, we have any exposure to any of these assets or the companies that were related to this situation. And now moving forward, I think this is a summary of what has been happening the past week. But as I said in the beginning, this is short-term volatility, and we've seen a price drawdown in the crypto space. But nonetheless, we believe there are several things that in the year of 2022 have evolved quite substantially. So in the next slide, what I would like to point is to several key developments that we've seen in 2022 that, in our opinion, really make the crypto fundamentals much more stronger than perhaps they were during 2021 when we were in a bull market. The first one, and this is basically a recap of many of the things that we've been discussing since the beginning of the year. First one is infrastructure. This year, we had Ethereum finally changing its consensus mechanism to proof of stake. We approached this in a September call, and we talked about the merge, and this was a major milestone for crypto as an asset class, and for Ethereum as one of the backbones of the whole infrastructure where assets, digital assets, are being constructed. Also, we started seeing more scaling solutions, which we believe are one of the key factors that would drive adoption of crypto assets 2, 3, 4, 5 years from now, instead of arriving at hundreds of millions of people worldwide, maybe billions at the end of this decade. One other thing, which is we at Hashdex also think it's very important for this space to keep developing and also bringing the necessary guarantees for investors, is regulation. We have been seeing quite a lot being done, not only in Europe, Brazil, but particularly so in the US, where we start to see several study groups and actual a lot of work being done by the White House, by regulators in the US, to really bring the necessary framework for regulation to this space. And two other examples, which I think are very important, is that in addition to all of this, we have been seeing utility coming, for instance, to Bitcoin, which is one of the things that we discussed in the October monthly call. And another key point, which is also connected to what we've said in the beginning regarding centralized players actually being perhaps one of the weakest points in crypto along 2022, is that if you look at DeFi, decentralized finance, it has been really resilient in this year. So we've seen these kind of situations with FTX, with Celsius. But if you look at Uniswap, Aave, a lot of the key protocols that are building this decentralized finance economy on top of Ethereum and other smart contracts platforms, they have been working as projected, and most importantly, everything is pretty much transparent. So you can see everything that's going on in each of these protocols, and we believe indeed that this may be one of the key solutions to some of these things that we've been seeing in the centralized finance space. Actually, DeFi is one of the core technologies, the core sector in the crypto asset class that may indeed bring a lot of good things and technologies that will aid the centralized finance space to become much more transparent, robust, and secure for investors. Another point which I think is important to stress is that even though we've seen these drawbacks and the drawdown in price, if you look at the institutional adoption of crypto, we have seen Fidelity, BlackRock, NASDAQ, Google, BNY Mellon, all of these key players in traditional markets, either in tech or in finance, really joining the asset class to bring utility and to bring products to investors, particularly for institutional investors. And this year, even though we've seen, as I said, this price drawdown has been pretty significant for this kind of developments in terms of institutional adoption. And another key feature of this year is that if you look at venture capital investment in developing financial services in DeFi, infrastructure, NFTs, all of these things that crypto really needs to bring a wave of services based on blockchain technology, this year has also seen, up until Q3 of 2022, a lot of investment, not only in terms of US dollars, in terms of billions of dollars, but also in terms of deals. So we've seen, if you compare 2022, without even counting the numbers for the Q4, which haven't closed yet, if you compare this to the whole of 2021, we're already seeing a total funding in blockchain venture investments almost equal to what we've seen in 2021, and the total deals already surpassed the number in 2021. So again, price against value and fundamentals, and this is another data point that we believe is really interesting to watch, and shows how, in terms of the development of technology, we keep gaining momentum in this space. And I think these two, this past two slides really show how perhaps investors in the period that the prices are really not that high, or we have seen a pretty significant drawdown in the prices. If you look at institutions, VC, venture capital, investors maybe can't afford to sit on the sidelines with regard to crypto. We've been saying throughout the year that that's maybe the ideal moment where you can see new technology, new projects, and really good blue chip projects really emerge into crypto. And I think this article in our website from João, which is our portfolio manager, really stresses this point that perhaps this is a very good place to be when it comes to joining this asset class as an investor. I think now I can hand it over to Pedro, and I think the idea moving forward is to show also additional points pointing to more signal within all of this noise that we've been seeing the past several months in 2022.
Yeah, thank you, Lucas. I think we we should stress this point that obviously that what's happened with FTX and Binance, although there's an answer to the problem, it would have been worse if there were no allow it to fail, and that's not the way that it's going. We're seeing the major centralized exchange taking over the third largest in the world. So there's an answer to the problem. Okay, so it's important to stress this point. And we're seeing, although it might be early, we don't know all the consequences and the cascading effects. But the fact that Binance acquires FTX, it puts an end on liquidity issues once it's completed, right? So it might halt the cascading effects going forward. I'm not saying it will. We don't know. These things are complex, but there's an answer to the problem already being tackled. Okay, so this is the main message. And again, this is a recurring issue. It's the same issue. That's why we are not so worried about over the long run. Obviously, in the short term, it's bad because it creates volatility. People have doubts about it. This is an emerging technology, and people are don't know about all the details. Regulators don't understand about all the details, but it doesn't change our long-term view, because again, it's a recurring issue. We would have been we would have been more concerned if it was a major problem on a major blockchain, or a problem on a decentralized application on top of Ethereum or something like that. That would be much worse. Okay, this is again a centralized finance institution that apparently lacked risk management controls, is having an asset and liability management issue, related parties issue. And obviously, it's no good for the industry. But these things are going to be gone in a month or two, and Binance is handling the issue. So just wanted to reinforce that, and to close this comment is that again, Hashtags does not have any exposure to FTT token, FTX. We didn't trade with FTX, nor we didn't do OTC trading with Alameda Research. Okay, so this is part of our due diligence. This is part of our internal processes. So and just answering some of the questions that we have here on the Q&A section of our chat. What are we doing to avoid exposure to the next Celsius, Luna, FTX? Again, we were not exposed directly to Celsius, Luna, or FTX. Now we didn't have any tokens in our product, and part of what we do here is this strict due diligence on the stuff that we put on our products, on the tokens that we put on our products, and the index that we develop with Nasdaq and some other players. This is where the diligence occurs, and being a global player that wants to have high grade products for the institutional market, we can't afford to lower the bar in terms of the exchanges that we trade and the custodians that we use, and this is part of the answers that why we don't have exposure to these situations. But again, we had written this presentation, we had prepared this presentation the past week, and then this event occurred last night, and or yesterday. But what we're seeing in the past couple of months, and this is not an affirmation. This is just some signs that we're seeing, and we're bringing this provocation of there's signal within all this noise. And Lucas, if you could put the slide, the next slide. And we're saying this is just observations from market prices and from market movements up until yesterday. And again, we think this is short term and it's going to be solved as it is being tackled right now. Up until yesterday, we have seen, Bitcoin's volatility and the overall market as well, volatility as well, come down to levels compared to the S&P 500 and the Nasdaq 100. Okay, this doesn't happen very often, but it's something that we're paying close attention to. Obviously, it comes after a very severe correction, but what this may indicate, again, we're not attesting it, we're just saying there might be signals that there's might be a market bottom for crypto at least, and this is one indication. Bitcoin's volatility, it's very low, and and then it's compared to traditional instruments like the S&P 500 or the Nasdaq 100, and the short-term correlation with S&P 500 and the Nasdaq 100 have also started to move down. Okay, obviously the macro environment is still very uncertain. It's very fluid, but from a macroeconomic perspective and from a monetary policy perspective, especially in the US, we've seen a severe increase in interest rates in a very, very short time horizon. Okay, and we know, monetary policy, especially interest rates, they have a time delay. It takes time for these things to take effect, Okay, but we shouldn't take for granted all these Fed fund raises that happened, the past 6 months. And eventually we're seeing, inflation stabilizing, and markets are predictive systems, and what we need is the stabilization of the macroeconomic factors. And we probably may be approaching some stabilization in macroeconomic factors in the next 1 to 2 months. And we've seen crypto somehow maybe react to that in a sense. Some people say that Bitcoin, because the fact that it trades 24/7 and all other traditional assets do not, it's the ultimate volatility index of the market now, because you can look at it in a Saturday night and see what's going on. But this is just a joke. But what I'm saying is, there might be some information here for players to pay attention to. Can you fast forward? So we brought a few of the of some metrics, price metrics that we're taking a look at now, and what we've seen. I don't want to get into too much detail of this presentation, of this part of the presentation, because this is information from Monday night. But and we've had this Bitcoin, Ethereum coming down some 10 to 15%. But we're seeing, for instance, equities still going down, and crypto. This is what I just said. Crypto, especially Bitcoin and Ethereum, in August, in October, and in November, they are decoupling. They're having a different performance, right? So one other aspect that we think it's interesting, for instance, Uniswap, the decentralized exchange on Ethereum, which we've written before this year, and we talked about it. And during some moments of this year, has had equivalent volumes of Coinbase, for instance, and it's just a piece of software that runs on Ethereum. Is also decoupling from the performance of the Coinbase equity. Okay, we've seen that in September, we've seen that in October, we've seen again in November, and again we just, and then the last table here on the right part of this slide, we've seen the fangs. We've put all the fangs here in their performance, and we did an equal weight at the end of this. Is the last line of the table. Again, we're seeing in October and in November, Bitcoin and Ethereum going up much higher than this equal weight basket of fangs. And in November, it's going up while it's going down. So these are just signs. We don't know if it's a market bottom, but it's showing us something, and it's not absent of fundamentals. That's what the whole message here. That's what Lucas just showed to us. There's a bunch of stuff going on several fronts in crypto, and the institutional adoption is just it's a strong message. There are big names, BlackRocks of the world, Goldman Sachs, Starbucks, Nike. You name it, all big major companies, all big major banks, they're all working with crypto technology. They're working with blockchain technology, and regulation is finally, taking a look at it from a proactive stance. They're looking at it, thinking, this is a technology, this train has left the station. We cannot be left out. That has been the American government approach. So the point is, you have all these fundamentals. There's price volatility. These are exponential technologies. We expect high volatility, especially at this stage of development, right? Something that goes up 100, 200, 300% goes down 50%. So what we're seeing in the last 2 months is, maybe there's some signal here. Maybe there's something going on because there is fundamentals. If none of this was, that Lucas just went through, were happening, I couldn't make this point, So this is the main message that we're trying to leave you guys here from the price performance of the last 2 months, and we have some more, info. Good forward, Lucas, that reinforces this point. This is a asset class performance snapshot that we're comparing the worst moment of 2008 against the worst moment of 2022 turmoil, right? Because and this is we had to do it September because of the September 2008. But the point of this slide here is at the end of 2007, right before the great financial crisis, and this is data from Bloomberg and CoinMarketCap, the value of global debt at the end of 2007 was around $170 trillion. The value of global equity was around $65 trillion, right? So we had roughly in these two asset classes, there wasn't crypto at the moment. You had $230 trillion of value, right? So you get the year to date up to September 2018 total return of these asset classes, and global debt only fell 0.5%. Global equity fell much more, 25%. Obviously people didn't have anything, and the nominal value, the dollar nominal value impact of that drawdown was $17 trillion, right? The point is, for now we do the same calculation, and so you see the global debt, and this is something that has only happened, I think, 3 times in the last 100 years, where equities and debt fell a lot in a year. And so the global debt value at the end of last year, December 2021, was $300 trillion. The global equity was something around $125 trillion, and we had $2 trillion of this new asset class called crypto, right? So it's something. So this added up to $430 billion. Up to September 2022, global debt had come down 20%, global equities 25%, and crypto 50%. And the nominal value, the dollar nominal value of this drawdown is close to $100 trillion, right? So this is major event. The point of this slide here is you add this major drawdown in assets. This is purchasing power at the end of the day, with the huge increase in interest rates in the U.S., which is the largest interest rate in the world, the largest debt market of the world. We may be in front of a major slowdown somehow, right? And just to add up, these are pieces of information that is happening in the market that we want to bring to you guys, and these are shouldn't take for granted. These are major movements already. So and the fact is, crypto is still the point is that crypto is still a very, very small piece of this large pie, and once we think about crypto and blockchain technologies as a new asset class, we can compare this to global debt, global equity, and if this thing works fine, regulation works fine, players continue investing, there's institution adoption, which is everything that we're seeing, and this is what Lucas pointed out. This might be an interesting entry point for this new technology. Lucas. and more short-term stuff that we're seeing, which again, we're trying to make this differentiation between macro and crypto. In the UK, we had in October this, the gilt or the bond market in the UK market turmoil that make the UK look like emerging markets. We had never, this is rare, but again, another macro event. The Fed meeting just last week, the message was no policy pivot yet, anytime soon. The terminal rate could be high, but again, we have to look from the Fed's lens. They're solving for much lower inflation for 23 to 24, and they have to see signs that things are slowing down. So it's the message, no policy pivot yet. Is the right one. I mean, I'm no expert here on monetary policy, but this is what they have to do. But another piece of information of the 10-year rates against the 3-month rates inversion, right? So the 10 years rates are, lower than 3-month rates. This is a clear sign of recession. All past 8 recessions in the US have had this situation, have been preceded by this inversion. Again, on the macro side, on the good side, I think that came out, which is kind of macro plus crypto, is the Twitter acquisition by Elon Musk with Binance as a co-investor, and they're giving we don't know what they're going to do yet, but the idea is to involve crypto payments, something like open source code, Web3 approaches and stuff like that. But and on the crypto side, again, beside this very short-term issue with FTX and Binance, we saw shorts being liquidated, the largest event in history just last week. Bitcoin and Ethereum amounted to $1.6 billion of short being liquidated. Bank of New York Mellon, the world's largest custodial bank, is they're going to be offering crypto custody for their clients because clients are requesting, right? Google Cloud announced a major Web3 partnership with Coinbase Institutional. Coinbase, second largest exchange, centralized exchange in the US, regulated, listed in the New York Stock Exchange, or NASDAQ, I should say. DeFi, JP Morgan executed its first trade on a public blockchain, right? Polygon. This is major. Instagram announced, they're going to support, a Polygon-powered NFT marketplace. Remember, Instagram, they have 2 billion users, daily users. This is big, right? Bitcoin, Cash App. Users can now send and receive Bitcoin using, the Lightning Network. Okay. And lastly, which is important to highlight as well, is since the merge took place, we talked about it in the last 2 calls, which was the major upgrade on the consensus mechanism from proof of work to proof of stake. It had 2 major impacts. Just to remind you, everyone, for those who are not familiar, one is the huge reduction in energy consumption, something close to 99%, and also a big reduction in the issuance of ETH by the network to validators, right? So what we saw, and last night, for the first time, it became deflationary. So what it means then is that the whole stock of ETH issued today is smaller than it was prior to the merge took place, right? So and this is a function of obviously the new issuance schedule that was reduced a lot but also by network activity that took place on the network. So again, we're just trying to make the point here that there's macro, there's crypto. Macro is crypto, crypto is macro in the short term, but we have all these things happening that make us very, 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 very confident in this technology, and this thing is going to happen. And we just wanted to send this message to you guys. And we have 2 more slides, Lucas, just to wrap up and open up for questions. And this is you can guys, this is the on-chain metrics, which means it's data collected directly from the blockchain, and it's open for anyone can do this graph. And then you can, this is from lookintobitcoin.com. They have a bunch of graphs about Bitcoin, and the point of this graph here, with all these shades and ups and downs, is that this is the realized cap, which is the capitalization of all Bitcoins using the price that these Bitcoins were last moved. So you can pull this data from the chain. This is registered on the blockchain, and you can do this calculation. And then you calculate this market value to realized value Z-score, which is a fancy name for just to assess when Bitcoin is overvalued or undervalued relative to this realized cap. And the point is, and you can see the green shaded at the bottom of the graph, is that we are at a point of this NVRVZ score that in the past, and this is just a graph, the graph could not mean anything in the future, but market participants use this, and this could be, a very interesting entry point. And lastly, it's another graph from the same website, Looking to Bitcoin, but you could pull it out from other sources, but it calculates the 200-week moving average. And in the past, and Bitcoin, has been around since 2009, and so there's a fairly decent long database here. Again, it's just a graph. You could past performance is no guarantee of future performance, but every time that it touched this 200-week moving average in the past, it showed a bottom of a market bottom. Okay, this cycle specifically, it's been trading a little bit lower, and this graph is on a log scale, right? It's been trading a little lower than 200 weeks moving average. This hasn't happened in the past, so we're paying attention to it. Well, other people are, but if this is a sign, and if we don't continuously keep it below the 200-week moving average, it might be another sign of a market bottom. So with all that, I close my arguments here in trying to answer the question: does the crypto market have potential to decouple? I don't know. Short terms, it's very there's a lot of randomness in the markets. The macro environment is still very uncertain. Doesn't look like the Fed will just pivot just yet, but there are some signs. Some data points that indicate that crypto assets may have found the bottom. The institutions are coming in with all the information that we provided, and ETH fundamentals are improving considerably. And this is the second largest and most useful, or has most utility blockchain in the market. So we're just trying to make the point here that the long-term investment case for crypto, being this exponential growth technology, remains intact. These short-term events are bad. Volatility is bad, but we like what we see from the fundamental perspective. Thank you, guys. I think we have some time for questions. Chris?
Yeah, thanks Pedro and Lucas for the presentation. I think it's an important factor that we look at both the macro scenario as well as sort of what's going on in the adoption regarding the crypto ecosystem. I think obviously the last 2 days or so has sort of brought some interesting developments regarding the crypto ecosystem, and I think a point before we just get into questions, and please include some questions in there, because I do think, we do have a deep bench of research here regarding the current events, as well as what's going on in the macro environment, that we can help do some clarification for us on the call here. One of the things I just wanted to point out to Pedro's point around FTX more broadly is that really the investment case for what Hashdex does regarding index products, I think, has never been more appropriate than in this current environment, mostly because what it tries to do is look at volatility across the entire crypto ecosystem and tries to balance that out with a very deep risk analysis, a very deep due diligence. We have a very skilled and experienced operations team, like any asset manager, that looks at all the different risk factors regarding liquidity, regarding leverage, and a number of other pieces regarding not only custody providers, but also different tokens. So more information on our methodology regarding our investment thesis, like I said, please go to hashdex.com. We have a lot more information there. So with that, let's open it up to questions here. We have some questions around the moving average. Pedro, I don't know if you want to describe that. It's a second to last slide. I'm not sure what that's.
Yeah, Chris, I think I can chime in with that. I think that the question is if what the S stands for. It's simple moving average. It's just that usually, but when you think of technicals in terms of price, people use exponential moving averages, which weigh in more the most recent data. And the simple moving average is basically an average without really weighing more recent rather than past data. And I think the 200-week moving average is a specifically important average, long-term average in terms of when you look into Bitcoin, because we know that Bitcoin has this halving every 4 years. So 200 weeks is more or less 4 years of data. So we see that anytime we see this kind of bottom in the past, it's a little bit later and like 1.5 years preceding the next halving. So this is why people tend to use this as an indication, like a technical indication, that maybe the price of Bitcoin may be bottoming.
Yeah, that's great. Thank you. And then we have a question here. We will be making the presentation slides available. So anybody who's attended the call will have that available, as well as a replay of that call will be posted on our YouTube channel as well. So I think that should be, hopefully should help answer that question there. And then, one question for me, I think it's worthwhile asking about sort of the overall investment case. We mentioned CeFi on the call, and really the issues around FTX, in my mind, more broadly ask the question of whether or not this strengthens the case for DeFi more broadly, right? Because what we're seeing around FTX particularly, does this mean that the DeFi exchanges will slowly become more relevant now that we're seeing some questions around whether or not these very broad custody providers don't have as much transparency in the market, and I think as you both mentioned very, very astutely, the question that I have really around the crypto ecosystem is around transparency because of the lack of regulation. Do we really believe that DeFi has a greater place in the discussion now with the current issues around FTX?
Yeah, great question, Chris. This is a good point. And remember, CeFi, centralized exchanges, for instance, they have an important role, right? They are the first connection between fiat world and crypto world and blockchain world. So they are somehow a gatekeeper or entry point and exit point. So they have to comply with rules from the fiat world, because these exchanges are on both sides of the equation, right? So they have a function, right? So if you want to get into crypto, someone you deposit fiat, you purchase crypto, and the first one does that is on a centralized exchange. But what they have differently, and what DeFi brings to the table, and this is the positive message about these things, is about this technology, and it didn't exist before blockchain, is that you now have same services being offered, on blockchains that are transparent, that are autonomous, that can be audited by anyone, that can be checked by anyone, that works 24/7, which is very, very different from what we have so far. What we have in centralized finance institution, and that applies to everything in traditional finance, is quarterly reports, with a third-party auditor stating that the financials are in XYZ, and they're in good shape or they're not, and then there's 3 months later you have another snapshot of financial statements, showing what's going on. So you have this time delay, that doesn't occur in decentralized solutions on blockchains, right? Or in protocols, in applications. So this is what this technology brings to the table, and I think this is something that society will, over time appreciate more. And the more that these problems occur, the more it reinforces the value of open and auditable technology. So you asked me, will these put will make the case for DeFi? I think it will. People will, society, regulators, market players, everyone will say, oh, okay, one more CeFi issue. Okay, what's going on with DeFi? No problem. They've been audited. It's been audited 24/7 by anyone from anywhere in the world, 24/7. Oh, we might have something here, So that's how I see this. And then again, I mean, when you look at it from the investment perspective, you get the market caps of all these DeFi solutions added up, and you compare it to the global financial system. It's a fraction of what it can be. It could be 100 times bigger, So again, it's a step-by-step thing. People need to understand these are complex technologies, but it's happening, Chris. And I think society will see these as a valuable tool to society.
Perfect. Well, that's all the time that we have, everybody. Thank you so much for joining us. Thank you, Lucas and Pedro, for your insights. For more information on our research thesis, please go to hashtags.com. Our research center is very broad and has a lot of information there, so please visit. Thank you so much for your time, and have a pleasant day.